Hey, what's up guys? This is Martin from Trader Today. In today's video, I'm going to go over what's happening with the market. There's actually been a lot of movement, which is really good. I haven't posted a video in a while, so I kind of want to go over the market as a whole, what's been happening, what's going on, what's moving, what's not, and so you guys have an idea of where the next move is going to be. Okay, so let's go over the S&P 500 really quick. Now, the market has been trending very nicely the last couple weeks. After this huge sell-off in February, it definitely has bounced a couple times, and it feels like this definitely this area, this 260 area, definitely held. The 200-day moving average held, which is very important. You guys can see that right here. This red line is a 200-day moving average. It's very important for market psychology. For long-term investors, when prices do break over below the 200-day moving average, you could definitely see some nasty selling. So that didn't happen, which is good. So it is trending, as you guys can see. The 9 EMA, which is a short-term trend line, is holding those levels, which is really important. So the market is trending. Now, what is leading the market? Definitely technology. If you guys look at the tech or the NASDAQ, is already trading all-time highs. If you look at the FANGs, absolutely just insanely, let me actually going to go over Facebook. Look at a one-year chart of Facebook. After this nasty sell-off with the privacy issues, literally it got back everything it lost. So literally it's already touching and testing all-time highs, which is pretty crazy. So a lot of these players, traders who bought these dips, probably very happy right now. So that's Facebook. We got Amazon trading all-time highs, Apple trading at all-time highs, Netflix trading at all-time highs, and Google's the only one that's kind of lagging a little bit, but it's getting there. It's absolutely getting there, and I have no doubt in my mind it's going to get there either. So as you can see, it is trending over the 9 EMA, and it's going to definitely get there sooner or later. So that's what I wanted to cover, but there's more to it. There's a lot more to it, and that's what I want to talk about. So let me just take out of these trend lines so you guys are able to see the charts a little bit better. But financials are starting to make a move. Now, as you guys know, well, maybe some of you guys don't know, but next week on Wednesday is the FOMC meeting, where they're going to talk about interest rates. Now, the CME FedWatch tool has a probability of 80% or higher that they will raise interest rates. So that's already kind of been, I guess you could say, the market already kind of knows that. So long as that happens, I think we're going to see a rally in financials. And the reason why is because when interest rates go up, financials go up. And the reason why is because for every percentage interest that the Federal Reserve raises interest rates, banks raise interest rates as well, which again charge more interest on new loans, whether it be car loans, mortgages, or whatever. It all affects all interest rates. So how do banks make money? They make money in interest. So that's very important. So of course that's going to benefit financials. So you guys can see a move right now on the financial sector, which is pretty awesome. And there's also a move happening, very slow move, but happening in healthcare, which I am trading. So I do like that. So there was this, again, after the sell-off, consolidated, there was this level right here at around 48.8350 that was kind of holding and testing. It finally broke out of that level, and it looks like it's going to resume a trend. So that looks very nice. So I'm looking forward to that move. And not only if financials are moving in healthcare, but also you got consumer discretionary trade all-time highs. You got industrials. It looks to me like it's ready to make its next move. And materials are actually made a huge move today. They led the market today with 1.85% up today. So that's pretty nice. So the market as a whole is definitely making moves. The only things that are lagging right now, of course, is utilities, which again, when interest rates go up, utilities and consumer staples and even real estate does tend to go down. And you ask why? Because there's interest rate sensitive. Right now the Federal Reserve is raising interest rates, to kind of to kind of mitigate inflation, to make sure inflation doesn't go over 2%. So because of that, again, it hurts utilities, it hurts consumer staples, and it hurts real estate investment trusts. Now, energy is another sector that's kind of trending very nicely. So we definitely have energy, even biotech. Biotech's trending. So we have energy, biotech, technology, industrials, consumer discretionary, healthcare, financials, and materials all making a move, which is what is it, about 1, 2, 3, 4, 5, 6, 7, 8 sectors out of 11 sectors. That's pretty good. Like more than 70% of the market sectors in the market are moving. So that's very, very good for the market. So I could definitely see the market continue to trend and maybe even make new highs, or if anything, test the old high of a 286. So that's definitely possible. So right now it's holding that trend. It looks very nice, and we'll see what happens. So some of you guys may be wondering, what positions are you in? And I'm going to talk about that. I did like Tesla today because, Elon Musk did announce that they are close to hitting their 5,000 per week production of Model 3s. And they see that happening in the next month or two. So that's really good for the market because the whole sell-off was based on not hitting those production goals and the possibility that they may be cash strapped, meaning they may need to raise money again. So when they raise money, it dilutes the shares, depending on the way they raise money. Either they raise money by, selling more shares or by getting more debt. But again, overall, raising money does negatively affect the company. But if they are able to meet those production goals, they could just sell those cars and may be able to avoid raising money again. But regardless, there's a huge short position on Tesla. I believe 36% of the float is short. So a lot of those short sellers are covering today. If you look at the volume, it's humongous. Look at this. Over 18 million shares traded today. So I do see a short-term momentum movement in this. So I'm in this for a short-term swing trade. I am in BlackRock, again, financials. So I do like that because I am long financials. CME is about to hit my target. So, I'm long CME, so I like that. Now, I am actually long Tencent. And the reason why is because, they have a pretty awesome long-term trend. This is 1 year chart, but if you even go further, 5 years, it's a very strong trend, and it'll look like it held this level of 50. And if you look at the moving averages, it held this 200-day, and it's above the 200-day, 50-day, and 90 MA. So I really like that. So that's the main reason I'm in long Tencent. So that's pretty much it, guys. So and I'm also long healthcare, by the way, as well. So hopefully you guys like this video. Hope you guys learned something, and you guys will hear from me soon. Have a good one, guys. Bye.